Hello, welcome to News.Markets. Market volatility has been dizzying on both sides of the Pacific. The Fed didn't raise rates and emerging market currencies had their worst week in a while. But the renminbi remained more or less stable. The Chinese currency is the 9th most traded in the world and the most traded in Asia. But it's under a strong degree of control, so its options market might well be expected to behave rather differently than other currency pairs. How different really is the Chinese currency? Well, Professor Jessica James, Managing Director and Head of Forex Quantitative Solutions Group at Commerzbank, joins me now. Thanks for coming in. I hope you're going to solve this riddle. Look, there are two currencies, so which one are we talking about? Or are they the same thing?
Well, very good point. There are two. There's the CNY, which is the onshore currency in China, which is the more controlled, which has its trading band established and kept to. And then there's the CNH, which is the offshore, which is called CNH with reference to its kind of Hong Kong origins. That's not controlled, and that trades in a much wider range and is favoured by some companies because there's fewer restrictions. So to start off with, you have two currencies in China. CNY is more liquid because it's simply got a larger trading base, but the CNH is catching it up as fast as it can. In fact, some of the forwards markets in CNH are nearly as large as the forward market in CNY. So you're definitely playing a bit of a game of catch-up there.
Can you use the same principles that you would when you're studying, when you're looking, when you're trading other kinds of options markets?
Absolutely. So the question is, do the two currencies have an option market? Yes, they do. How do they behave? Do they behave similarly to developed currency markets that are mature, option markets that are mature, that have been going for a while, or are they very, very different? And everyone thinks they're going to be very different. And I looked at them and I found they were incredibly similar. That both CNY and CNH, the option markets in foreign exchange, behave in an incredibly similar manner to developed option markets. Quite remarkable.
Does that mean the risk is the same for investors?
What it means is that you can use options to protect yourself the same way that you would in other markets. So if you want to buy an option to protect against a depreciation in Mexico or Australia, it's the same kind of process as buying an option to protect against depreciation in China.
Okay, so where to find the good value? And where do traders really start here? Where can they find these instruments?
I mean, you will simply go onto your Reuters or Bloomberg. You can see Chinese options, the CNY, CNH options, all very clear. You can see a history of volatility to give you some reassurance that there's been a market for a while. And then you can phone up your favourite partner bank and say, I would like a quote. And you will get a quote from the major banks in the area. So you really can just go and trade Chinese options in a very similar way, as long as you've got a bank who is obviously active in the area.
So you're saying, go ahead, look for them, find them, trade them, have no fear?
I mean, people are naturally nervous of a currency that's been somewhat controlled for a long time and is still somewhat controlled. But what history shows us is that the behaviour of these options, even through crisis periods, has been very similar to the behaviour of other options. So an option is a protective contract if it's bought. It's obviously a risky contract if it's sold. That doesn't change. But Chinese options historically have not been more risky, and they have not been, traded as disadvantage to others.
What about plans to internationalise the currency? How does that affect the market?
It should only bring it more in line with what we've seen in other markets. So as liquidity improves, you should see, for example, the shorter dated options come into line with the others. There's less data, for example, on the very short dated options, and it looks a little bit strange compared with the rest. I'd expect those to normalise and come into line along with everything else.
So do you think that options is a way for investors to trade China? Because it's quite tricky to work out how to do it with all the mix of news that's coming through.
Yes, I mean, I love foreign exchange options. I mean, I was lucky enough to be speaking with you a little while ago about foreign exchange options. They are a very popular, for good reason, protective contract. So they do limit your losses in a highly effective way, and you can use these to protect yourself against currency changes in China. They are very much a valid way of doing so.
And just lastly, I mean, what's your outlook for China? Because there are some commentators who say, well, you know, China's over. We had all that good news, but now it's just more bad news after bad news. It's yesterday's story.
Goodness, I mean, I should start off by saying that there's probably colleagues of mine who are better placed to comment on that. But if we, again, I love to take a step back and look at the data. Look at the changes in the last 20 years in China, from a closed economy to, you know, the boom town of the world. And has there ever been a surge from this kind of more rural society to a fully developed industrial society in that period before? I think this must be a record in the world. Has there ever been such a change without, you know, a few trend reversals on the way? I'm sure there has not. So simply the fundamentals in China lead us to realise that this is a growing economy that's going to be growing for some time. Will it grow at the same pace? I'm sure that there's going to be blips on the way. There were blips as America grew. There were blips as you know, the British Empire expanded. But the fundamentals are so strong there.
And it's a market that you're excited about, especially when forex options are involved. Jessica James,
Absolutely.
always a pleasure talking to you. Thank you.
Thank you.